Hello everyone and welcome back to another session of Nishma's Edu Launch. In today's class, we'll see the treatment of special items. So let us quickly move on to the session. Before moving on to the treatment of special item, let us understand what is meant by fund-based accounting. Now, fund means any amount that is set aside by the not-for-profit organization for meeting a specific purpose. Say sports fund, library fund, tournament fund, etc. So that name itself suggests that only for that particular reason that fund can be utilized. And you will have various receipts and payments for as like expenses with relation to that fund created. So all those incomes and expenses will be adjusted from that fund created itself. Okay. So you have an opening balance. With that, you will add the receipts or the incomes received with relation to that fund, and finally you will deduct the corresponding expenses. Okay, and after adjusting the expenses, if your amount obtained is a positive figure, you will show that on the liability side of the balance sheet. Okay, that means that the fund created is more than the expenses. So you have a positive figure. So that will appear on the liability side of the balance sheet. Okay, in other case, if the expenses are greater than your fund created, even after adding the receipts with relation to that fund, you cannot meet the expenses. Okay, in that case, you will have a negative figure. That means you have excess of expenses over that fund. So in such a case, you will debit that excess of expense to income and expenditure account. Alright, I'll show you next slide in which you will get a more clear idea. Okay, so I have taken sports fund here. You have an opening balance of 1 lakh rupees here. Okay, 1 lakh rupees, and you're going to add donation which is 10,000 and a receipt. Okay, then you have another receipt of interest earned on deposit with relation to sports fund. Okay, so that is 8,000. So you will add that 8,000 also, and you will get a total of 1,18,000 rupees. Okay, so from that you have an expense for the year which is 7,000 rupees. 7,000 rupees. So you will deduct that 7,000 rupees from 1,18,000 rupees. So you'll get a total of 1,11,000 rupees. Okay, now that is a positive figure, and it will be shown on the liability side of the balance sheet. Okay, it will appear on the liability side of the balance sheet. Because why? Because the sports fund is greater than the expense. So it will appear on the liability side. Okay, let us consider another example. Okay, you have a sports fund of 10,000 rupees and you have donation which is a receipt of 5,000 rupees. Then you have an interest of 1,500 rupees, and you will add you will get a total of 16,500. Okay, from that you have expenses 20,000 rupees. Okay, 20,000 rupees. From this itself, it is clear that your expense is greater than the fund created, sports fund. Okay, so you have a shortfall of 3,500 rupees. You have excess of expenses over that fund, sports fund. Okay, so what will you do with this 3,500 rupees? This is a negative figure. Negative figure, why? Because it is expenses are greater than the fund created. So you have a negative figure, and this negative figure of 3,500 will be shown in the income and expenditure account. It will be debited to income and expenditure account like any other expense, revenue expense. Okay, so this is how you will do fund based accounting. You have a fund created there, and you have corresponding receipts and expenses, and you will adjust that receipts and expenses with that fund created, and the final amount, if it is positive figure, you will show that on the liability side of the balance sheet. On the other hand, if you have a negative figure, that is you have excess of expense, you will debit it to income and expenditure account like any other expenses you have on the account. Okay, so that is about fund based accounting. Now let us move on to the treatment of special item. The first item is subscription. I have uploaded a video regarding the adjustment of subscription. If you have not watched that video, please watch it and come back to the session, because subscription adjustment is a very important topic. You will have a sure question on the examination. So please don't miss that video. I'll be providing that link in my description box below. Okay, so I have provided the format. Here, income and expenditure account, subscription being an income, it will be credited to income and expenditure account. And with that amount of subscription, you should add closing outstanding and opening prepaid. Opening prepaid means what? It is received for the current year. Okay, and income and expenditure account is prepared with relation to current year. Okay, so you will add that figures, and from that figures you will deduct opening outstanding. Opening outstanding is relation, it's related to previous year, so you don't want that in the income and expenditure account, so you will deduct that, and also you will deduct the closing prepaid. Okay, if you have any closing prepaid is written in respect to what? Coming up year or the next year, so you don't want that neither. Okay, so you will write the income on the credit side, subscription received, to be received during the year. Okay, so you will get that using this formula. Okay, then in the balance sheet, subscription will appear on both the liability side and on the asset side. On the liability side, you have the closing prepaid. Closing prepaid of subscription shows the amount you have received, but it does not become due. So until it becomes due, it is a liability for you. Okay, you have received it, so it is a liability for you. So you will show that on the liability side of the balance sheet. And on the asset side, you will show the closing outstanding of subscription, that is the accrued income that has become due but you have not received it. Okay, so that is an asset for you, so you will show that in the balance sheet. You will show that on the asset side. Okay, so that is about subscription. Then the next item is entrance fees. Now the entrance fees is a revenue item, it's a revenue receipt, so it will be credited to income and expenditure account. Then life membership fee. Okay, life membership fee is a capital receipt. Okay, capital receipt, and hence it is added to capital fund and it's shown in the balance sheet. So capital fund is shown in the balance sheet only, so you will add this life membership fee along with the capital fund and you will show that in the balance sheet. Okay, now the next item is donation. Donations are of two types, general donation and specific donation. General donations are of the nature of a revenue receipt, so you will credit it to income and expenditure account like any other income. Okay, then in the case of specific donation, that such a kind of donation is received for a special purpose or a specific purpose, so it will be shown on the liability side of the balance sheet. For example, donation received for governor's party, like that. Okay, so such a donation will be shown on the liability side only. Okay, then the next one is special receipt. Special receipt is also similar to specific donation. Okay, you are receiving that receipt for a particular reason. Okay, and that receipt can only be utilized for that particular reason only. So you will show that amount in the income and expenditure account after adjusting. If any expenses are arising from that, from with relation to that receipt, you will show that in the income and expenditure account. You will deduct it and you will show that in the income and expenditure account. Then the next item is legacy. Okay, legacy is the amount received as per the will of the deceased person. Okay, like some persons, some rich people will write a huge amount, right, of or will transfer a huge amount from their total asset to in the name of a trust or any other organization. So such kind of receipt is known as legacy. Okay, students will have doubt with relation to legacy, whether to show it as a, whether to treat it as a revenue receipt or as a capital receipt. Okay, I'll tell you, if the amount of legacy is greater than 1 lakh, you should treat it as capital receipt and you should show that on the balance sheet, liability side of the balance sheet. And if the amount of legacy is less than 1 lakh rupees, you can treat it as a revenue receipt. Okay, revenue receipt, and you can show it in the credit side of the income and expenditure account. Okay, that should be noted. Now the next item is sale of old newspapers. Okay, sale of old newspaper is a revenue receipt and you can credit it to income and expenditure account. The next item is sale of old assets. Okay, so in the case of old assets, you will have a book value of assets. Say for example, you have furniture worth 1 lakh in your hand, and out of this 1 lakh rupees, you are going to sell furniture worth 20,000. Okay, so in the next balance sheet, you have to deduct the value of the furniture sold. Okay, so that means you have to deduct that 20,000 rupees from the 1 lakh rupees of furniture you had in your hand. Okay. So that is one place you have to adjust the value of old assets sold. Then from the sale of old assets, you can get a gain or loss. All right. So in the case of gain, you will credit that amount of gain to the income and expenditure account, and in the case of loss, you will debit that same amount of loss to income and expenditure account, like expense and income. You will treat it like expense and income. Then the next item is sports material. Okay, sports material, you can get two types of sports material. One is consumed sports material, and the other one is sale of sports material. Okay, consumed sports material, or you can get it like consumed stock of stationery also you can get. Instead of sports material, you can also get stationery. In either of the case, the treatment is same. Consumed materials has to be debited to income and expenditure account. Now, how you will calculate the consumed materials? Okay, it is given by cost of materials consumed is equal to opening stock plus purchase less closing stock. Okay, if you apply this formula, you can get the cost of consumed materials, okay, which should be debited to income and expenditure account. So that is about consumed materials. Now the next one is sale of sports material. It is similar to sale of old assets. Okay, the portion of sports material sold, the book value of sports material sold should be deducted from the total value of sports material on the opening date, and the gain or loss arising out of such a sale should be adjusted. Gain should be credited to income and expenditure account, whereas loss should be debited to income and expenditure account. Okay, now the final item is honorarium. Okay, honorarium means it's a payment. Okay, it's a payment that shows a token of gratitude. Okay, it's sometimes in clubs or in any other organization, some programs or events may be conducted, and persons from the outside will be invited to conduct a program there, like magic shows or dance programs, etc. So that invited persons will perform their program on stage or on that event on that day, and for that performance they will be provided payment. Okay, so such a kind of payment is known as honorarium. You must note that honorarium is such kind of payment is non-recurring in nature. Okay, you will have a program once upon a time, or once in a blue moon, right? So you will not have program every day. You will have program on a particular day. So on such a day, you will invite persons, you will outsource person to conduct program on stage. So for that, payment made to such kind of persons who have been outsourced is known as honorarium. For example, guest lectures in colleges, schools, etc. Okay, for them the payment made is a example of honorarium. Okay, so that is non-recurring in nature. You make this payment as a token of gratitude. All right, so that's all about for the session. I hope you understood the topics and its treatment. We'll catch you up in the next episode. Thank you.